1. Start with energy, explain with authority, highlight with emphasis, end with warmth. 4.55 Canadian dollars, down 0.34 or a sharp 6.95% on the intraday session as we watch the tape on this Monday, December 1st. If you are staring at that red percentage on your screen, watching nearly 7% of the market cap evaporate in a single session, your first instinct is likely panic. You are seeing a classic miner flush. You look at the price of Bitcoin, you look at the price of Bitfarms, and you assume the correlation trade is simply punishing you today. The expectation, the lazy narrative that dominates the forums and the chat rooms, is that Bitfarms is just a leveraged beta play on Bitcoin. When crypto sneezes, the miners catch a cold. It is a simple, comfortable story. It explains the volatility, it explains the risk, and it explains why you are seeing red today. But the reality is that this drop to 4.55 Canadian dollars is masking a much more profound transformation that is currently under construction, literally and figuratively. The market is pricing Bitfarms as a struggling miner that missed its Q3 earnings expectations. The reality is that you are looking at one of the most aggressive infrastructure pivots in the entire digital asset space. We are not just talking about hashing algorithms anymore. We are talking about a company that is actively cannibalizing its own crypto identity to become a Tier 1 host for the AI revolution. Today's sell-off isn't just about the price of a coin. It is about the friction of turning a mining fleet into a high-performance computing HPC fortress. The market hates the construction phase because it is messy, expensive, and lacks immediate gratification. And right now, Bitfarms is deep in the mud of construction. Let's zoom in on the immediate price action we are seeing on the Toronto Stock Exchange and the Nasdaq today. The volume is heavy. It is pacing well above the 30-day average. This suggests that institutions are reallocating. We're in December. This is tax loss harvesting season. Bitfarms, having had a volatile year with the Riot Platforms takeover drama and the earnings misses, is a prime candidate for portfolio cleaning. Managers are dumping their losers to offset gains elsewhere. But while they sell, who is buying? The order flow suggests that the smart money, the infrastructure funds, and the long-term energy plays are stepping in at these levels. They aren't buying for a Bitcoin pop next week, they're buying for the gigawatts of power capacity that Bitfarms controls. To understand why 4.55 Canadian dollars is a battleground, we have to look back at the Q3 earnings report dropped in mid-November. The expectation was bad, but the reality was worse. They missed revenue by a mile, $69 million versus the $88 million Wall Street wanted. They missed EPS. The stock got hammered. But why did they miss? Because they are retooling. They are shutting down inefficient sites, selling off assets like the Iguazu facility in Paraguay, and funneling that capital into the U.S. expansion. This is the expectation versus reality gap. The expectation is that a miner should be printing money when Bitcoin is high. The reality is that Bitfarms is sacrificing short-term mining profits to build long-term AI revenue streams. They are essentially saying, we don't care about Q3 2025, we care about Q4 2026. I want you to pause and look at your own thesis for holding this stock. Comment below if you are holding Bitfarms because you want more Bitcoin exposure, or if you are holding it because you believe in the AI data center pivot. I'm genuinely curious to see how the retail base is split on this, because the company's messaging has shifted dramatically. Let's talk about the Washington strategy, because this is the single most important development for the bull case. The general belief is that all mining sites are created equal. You plug in a machine, it hums, you make money. The reality is that AI machines, specifically the new NVIDIA GB300s that Bitfarms is targeting, are divas. They need specific cooling, specific humidity control, and massive amounts of stable power. You cannot just throw a GB300 into a shipping container in a field in Texas and hope for the best. Bitfarms is converting its Washington facility to support these advanced liquid-cooled chips. This is not a retrofit. This is a complete metamorphosis. They are targeting a December 2026 completion. That seems far away, which is why the stock is weak today. Investors are impatient. But if they pull this off, that one site could generate more net operating income than their entire mining fleet combined. That is the leverage in the system that isn't priced in at $4.55. We have to discuss the Riot Platform's elephant in the room. For the first half of 2025, this was the only story that mattered. Riot tried to buy Bitfarms. Bitfarms fought back with a poison pill. It was ugly, it was personal. Then they settled. Riot agreed to a standstill. They expanded the board. The expectation is that the war is over. The reality is that this is a cold war. Riot still owns a massive chunk of this company. They are watching every move. If Bitfarms stumbles, if this AI pivot fails, if the Washington site is delayed, Riot will be back, and they won't be asking nicely next time. This creates a put option under the stock price. In a way, Riot's interest puts a floor on how low this can go, because at a certain price, Riot just buys the whole thing. Let's look at the energy portfolio, because this is the real asset. You are not buying ASIC miners when you buy BITF. Those depreciate to zero in 3 years. You are buying the power purchase agreements. Bitfarms has aggressively rebalanced its portfolio to be North America-centric. Selling the Paraguay site to Hive Digital was a masterstroke of strategy over ego. They admitted that spread-out global operations were inefficient. They took the cash, $56 million, and brought it home to the U.S. Now their portfolio is heavier in Pennsylvania and Washington, jurisdictions where the grid is stable and, more importantly, where the AI customers are. The market expectation is that energy is energy. The reality is that latency matters. AI training clusters need to be in the U.S. for data sovereignty and speed reasons. Bitfarms owning power in Pennsylvania, PJM interconnection, is infinitely more valuable than owning power in Argentina for this specific use case. If you are trading this on a Fidelity trading platform or swiping through your Robinhood app, you are likely seeing the high-risk tags associated with this stock. And they are right, this is high risk. But the nature of the risk has changed. It used to be Bitcoin price risk. Now it is execution risk. Can they build the data centers on time? Can they secure the cooling equipment? Can they sign the customers? This is a construction project now. Let's analyze the technicals on the chart. 4.50 Canadian dollars is a psychological support zone. We are flirting with it right now at 4.55. If we break 4.50 with volume, we could see a flush down to the $4.00 level, which corresponds to the lows we saw during the depths of the 2023 bear market. However, the RSI on the daily time frame is approaching oversold territory. When a stock is beaten down this badly, down 7% today after a rough month, it often snaps back violently on any piece of good news. A press release about a new customer or an update on the Sharon, Pennsylvania site could trigger a short squeeze. speaking of Sharon, Pennsylvania, let's dig into that. This was the big acquisition. They took over a site with 120 megawatts potential. They are currently operating about 30 megawatts there. The plan is to ramp this up. But we saw in the January 2025 update, which gave us the roadmap for this year, that there were delays. They pushed back the HPC integration timeline to 2026. Delays kill stock prices. The market hates next year. The drop today is a lagging punishment for those delays. Investors are saying, "Show me the megawatts, don't just tell me about them." Now, consider the miner efficiency metric. Bitfarms has always prided itself on being one of the most efficient miners. They track watts per terahash. This number has been improving as